I'm your host, a tax professional who honestly loves nothing more than taking completely confusing tax codes and translating them into clear, actionable strategies for you. My absolute passion is helping you keep your hard-earned money right where it belongs, which is in your business, fueling your growth. Because today, we're tackling one of the most absolutely critical foundational decisions you're ever going to make for your company. And I am so glad to be here. I'm your co-host playing the role of the everyday small business owner. And honestly, I'm here because taxes literally keep me up at night. I want to know exactly how to structure my business so my personal assets are totally protected, but I also really need to make sure I'm not getting absolutely crushed by the IRS every single April. Trust me, you're definitely not alone in feeling that way. Taxes can be super intimidating, but when you actually understand the rules of the game, they become a really powerful tool. So let's break this down together and get you some crystal clear answers. All right, let's just cut right to the chase with the ultimate question on every single entrepreneur's mind. Which one actually saves you more? I hear people throwing around the terms LLC and S-Corp literally all the time at networking events. Some say LLC is the only way to go, others swear by the S-Corp. Bottom line, which one is actually better for my taxes?
See, that's the multi-thousand-dollar question. The honest truth is, it completely depends on your specific financial situation. There really is no one-size-fits-all answer here. However, and this is a massive however, understanding the fundamental differences between these two business structures can literally save you thousands of dollars every single year. It is hands down one of the highest ROI concepts you can possibly learn as a business owner.
Section 1. The LLC Tax Reality. Understanding the baseline. Because to really understand the savings, we first have to understand where we're starting from.
Right, and almost everyone I know starts with an LLC, and for good reason, right? It provides really great personal liability protection.
Exactly. It completely shields your personal assets. Think of your house, your savings. They're safe if the business ever faces a lawsuit. But the real question is, what about the tax side of things? Well, that's where we get to the concept of a pass-through entity. When it comes to taxes, the business itself does not actually pay federal income tax. Wait, really? The business entity itself pays zero federal tax? Zero. Exactly. Instead of the business paying the tax, all the profits and all the losses simply pass through the business directly to you, the owner. They just get reported right on your personal tax return. Now, if you're what's called a single-member LLC, meaning you're the only owner, you're basically taxed as a sole proprietor by default in the eyes of the IRS. Okay, passing the profits to my personal return sounds pretty simple and straightforward. So what's the catch? Why are we even having this conversation?
The catch comes down to one massive number, 15.3%. Because you're taxed as a sole proprietor by default, every single dollar of your business profit is subject to self-employment tax. And that self-employment tax rate is a hefty 15.3%.
Wow, no way. So I'm paying 15.3% on top of my regular income brackets?
For sure. That 15.3% covers your Medicare and Social Security contributions. And as a self-employed individual, you have to pay both the employer and the employer portions. It literally takes a massive bite right out of your profits.
Let's put some real math to this so you can truly see the impact. Let's imagine your business has a totally stellar year and makes $100,000 in pure profit. Hey, that is a great year. I'd definitely be popping some champagne for that. Oh, you would be, until tax season rolls around and totally ruins the party. Because on that $100,000 in pure profit, you're hit with a painful $15,300 self-employment tax bill. 15 grand? Just for the self-employment tax part? Yes. And remember, the really crucial point here is that this $15,300 is before you even touch your regular federal and state income taxes. This is strictly just the self-employment tax hit. Ouch. Seriously? Do I really have to pay that much? 15 grand is a massive hit to my cash flow. That's money I could use to hire a contractor, upgrade my equipment, or, just put into my own savings. There has to be a better strategy here, right?
There absolutely is. We do not want you overpaying the government a single cent more than you legally owe. You've worked way too hard for that money. Let's move on and look at the actual solution.
Section 2. The S-Corp Advantage. The tax election that changes absolutely everything. I am all ears for this. Tell me about this S-Corp magic. Because I always kind of assumed an S-Corporation was for massive Wall Street companies, the ones with board of directors and those huge shareholder meetings. That is actually a super common myth. An S-Corp is not a completely separate, complicated business structure. It's simply a special tax election that's applied to your existing LLC. Oh, that's fascinating. So I can keep my LLC, keep all my legal protections, and basically just tell the IRS to tax me differently? Precisely. You get to keep the simplicity of your LLC, but you elect to be taxed as an S-Corp. The IRS just treats your money differently. And this is exactly where things get very, very interesting for your tax savings. So here's how the election works and how it fundamentally changes the flow of your money. As an S-Corp owner, you're now required to pay yourself a reasonable salary as an employee of your own business. We're going to take that exact same $100,000 in profit from our earlier example, but now we're going to slice it into two separate pieces.
Okay, got it.
So it's a salary piece and a distribution piece? Exactly. Let's say you pay yourself a salary of $60,000. You pay that 15.3% self-employment tax only on that $60,000 salary slice. The remaining $40,000, that just gets passed down to you as a shareholder distribution. And here is the magic phrase, that $40,000 distribution is not subject to self-employment tax. So because you shielded that entire $40,000 slice from the self-employment tax, you just generated some massive savings. Whoa, $6,120? Yes, that saves you over $6,000 in self-employment taxes every single year, just by optimizing the way your profit is categorized and distributed. You made the exact same $100,000, but you get to keep over $6,000 more of it. Okay, keeping over $6,000 more in my business every year is honestly amazing, but it naturally leads me to a pretty big question. If I can save that much money just by checking an S-Corp box and slicing up my profits, why doesn't every single LLC owner just do this on day one?
That's the perfect question to ask. The reality is, the IRS doesn't just hand out tax savings without adding a few hoops to jump through. Those S-Corp savings aren't totally free.
Which perfectly transitions us to Section 3, comparing the structures, costs, and strict requirements.
Ah, okay, the plot thickens. I knew the IRS wouldn't just make it a complete free-for-all.
Right. Because you're legally avoiding self-employment taxes on your distributions, to keep things fair, the IRS has 3 strict rules you have to follow. First, you absolutely must file a separate S-Corp tax return. That means your business files a return and you file a personal return, which obviously costs more in CPA fees to prepare. Second, you're now officially a W-2 employee of your company, which means mandatory payroll administration.
Let me make sure I'm getting this. So I have to use proper payroll software, withhold federal and state taxes, and literally issue myself a W-2 at the end of the year.
Exactly. It definitely adds administrative complexity. And then the third rule is the absolute most critical, the IRS reasonable salary requirement.
Let me guess. That means I can't just pay myself a $1 salary and take like $99,999 as a totally tax-free distribution?
I love the creativity, I really do, but absolutely not. The IRS requires your salary to be genuinely reasonable for the actual work you do in the business. If you try that $1 trick, they will quickly audit you, reclassify all those distributions right back into salary, and hit you with some serious back taxes and penalties. So let's compare these side by side. With a standard LLC, your tax rate is much higher because of that 15.3% hit on literally everything. But your administrative complexity and overall maintenance costs are incredibly low. It's very, very easy to run.
Right, okay. But with the S-Corp, I get that lower effective tax rate because of the distribution savings, but I'm taking on higher administrative headaches and higher accounting costs because of the payroll software and that extra tax return.
Spot on. You have to carefully evaluate these precise trade-offs to see if the juice is actually worth the squeeze for your bottom line. Small business owner, Section 4, making the right choice. When to flip the switch. I really feel like I understand the mechanics now, but I could really use a clear bottom line rule of thumb here. When does electing the S-Corp status actually make real financial sense for me? Like, when do the tax savings finally outweigh those extra payroll and tax return costs? The general rule of thumb really comes down to these profit thresholds. Generally speaking, if your business is making under $40,000 in pure profit per year, the additional costs of the S-Corp status, like paying for a payroll service and paying a CPA for a second tax return, they might actually outweigh the tax savings you get. In that zone, you usually want to just stick with the standard LLC.
Okay, that makes perfect sense. Basically, keep it simple until I hit the threshold. And what if I hit that rocket ship phase and I'm making well over $60,000?
Exactly. If your business is making $60,000 or more in annual profit, you've found the sweet spot. At that level, the S-Corp election typically makes total financial sense. The thousands you save in taxes will easily outpace the extra administrative costs, leaving a net positive of thousands of dollars right back in your pocket every single year. So which one is right for me? It clearly all comes down to knowing my numbers and accurately projecting my profits. But honestly, seeing all these strict requirements and reasonable salary rules, I definitely wouldn't want to navigate these IRS rules alone. I really don't want to mess with the IRS. And honestly, you shouldn't. At Reliable Accounting and Tax Services, we specialize in exactly this. We help small business owners choose the absolute perfect business structure, set up their books correctly from day one, and build a complete tax strategy that keeps more money in their business every single year. Whether you're an LLC, an S-Corp, or you're just starting out and still trying to decide, we are here to help you make the smartest financial decision for your business. Please, don't leave money on the table, consult a qualified tax professional, and get your strategy locked in today. But before we wrap up today's explainer, I want to leave you with this final thought. Take a hard look at your business right now. Is your current structure actually serving your growth, or are you just working hard to serve the IRS? It's time to find out.